Hi, this is Randy Finney with the right side of the chart, and today is Thursday, August 13th, 2020. What we're going to do in this video is take a look at trade ideas in the building materials sector. So from time to time, I'll find a sector that looks clearly bullish or clearly bearish, and then I'll drill down within that sector and try to see if I can sniff out the most bullish or bearish names. Of course, if they align with the outlook of the sector. So in this case, I can tell you right now we're looking at what I refer to as short setups. Trade setups. They're not actionable trades. The trend is clearly bullish in the building material stocks. However, the charts are very clear. So what stands out as I go through this video, a couple things. Number one, the sector, the posture of the sector, and as well as the majority of the stocks within that sector. I'm not going to cover them all. There's quite a bit in there, but I'm going to cover, I flagged about 20 or so individual trade ideas as well as an ETF. So I'm going to start out looking at the sector. I'll roll into the sector ETF. So if you don't trade individual stocks because it's too much to manage, you don't like the risk of an individual stock that can have an earnings surprise or any other event that can move against your position, ETF sort of helps mitigate those risks by holding a basket of stocks. You have diversity. So we'll start there. But as I like to do, when a sector is clearly bullish or bearish, at most points in time I can go in and identify the most bullish or bearish stocks within the sector, put together a little mini portfolio of my own that will outperform the sector. It doesn't take a lot, half dozen, a dozen, whatever you're able to manage of the best looking setups. And in this day and age of uber cheap or free commissions, it's cost effective. Even if you don't have a large amount to diversify among that, you can buy a few shares of a stock, 100 shares, whatever that number is. All right, let's dive into the charts. We're going to start out. This is on TC2000, their charting platform. This is IX 1020. It's a building materials sector, basic materials. So these are all companies, again, within that sector. And you have a pretty clear pattern of, wash, rinse, repeat. These are the things I look for. And, some sectors and some stocks act better to the technicals than others. This one does a pretty good job. You look for these divergent highs. Divergence is not a sell signal. You had divergence here, you had it here. Finally, it played out right here. What are your sell signals or breaks of price support, like right there? Then you went on to break the trend line, and there was your sell signal. So from that divergent high, that ended that bullish trend coming into it. There was a strong uptrend coming into it, a bullish, bull trend, about 100, almost 100%, 95, 97% gain in the sector over a period of a couple of years, followed by a 37% drop. And again, that divergence telegraphed a trend change was coming, and it didn't just end randomly. It was a typical, trend change signaled by a divergent low. Here's your divergence line, prices making lower lows, indicators making higher lows. That is positive divergence, and that set the stage for this 65% rally, which once again ended right before COVID hit. There's a common theme, and it was just about every sector that had the big corrections, it was priced in. A correction. You had cleanup trend line break. You had divergent high. Now, did the shutdown certainly exacerbate the sell-off? Absolutely, no doubt about that. But again, it wasn't, things started to roll over before the panic really set in. That was about right here, and that was a 48% drop. So again, the point I'm trying to make is the technicals work well, and you have a pretty clean setup right here with a nice, well-defined uptrend line, even a little better in some of these individual stocks and the ETF I'm about to get to. Now this was an atypical bottom right here. You didn't have, it was a V bottom. You didn't have divergence. You did actually take that back. A little bit of divergence there on the RSI. That was common. This is really, part of the Fed's plan of what I call, and the term I like to use is Ursa interruptus, which means interrupted bear. That's pretty much what it was. Throwing the whole, pulling out the nuclear option, and it's exacerbated the, the bear market rally. But these stocks are still poised for another leg down. When you look at the bigger picture of the sector, you can see past bull and bear markets. Here, we don't have to go back for 20, 30 years. We'll go back here to the early 2000s. It was a bull market there, and Again, weekly chart paints a bigger picture. You had a divergent high with the initial shot across the bow and your initial bear market rally. That one happened to carry it to new highs. So if you want to be a stickler, say, well, you can't call this a bear market rally because the market made a new high. That was the end of the bull market. But it broke the primary uptrend line, similar to what happened recently. And you had a kickback rally that carried it slightly above the previous highs, and either way, so you want to call it a the end of the bull market there, fine. The technicals were telegraphed there back then. That was into the 2009 lows, and that was about a 78% drop. Even in the bull market that ensued, we're in a bull trend, a larger secular bull market, but there's been plenty of buying ops in there, and pullbacks to the primary trend line, as well as shorting ops or times to get out, like these divergent highs. And the corrections, even in a bull market, even if you want to take the stance that we're in a super strong secular bull market with many years left in it, then you can still trade these 52, that's about a 53% correction on the first divergent high. Next divergent high back in 2015 resulted in about a 30% drop in the sector. The one that peaked in that was early, about the beginning of 2018, was good for a 34% drop, and then the one that right before COVID hit, we had a drop of about 50%. And so you can see now what's the common theme here is these negative divergences. In fact, we did not have it heading in. We had a clean trend line break. There's a sell signal without divergence, and it still led to that. Again, exacerbated by the shutdown in the economy, undoubtedly, but again, a clean sell signal, a clean uptrend line. But what we were lacking back then, and we have now, just like the NASDAQ 100, for example, is we have negative divergence on the weekly chart. That sets the stage for an even bigger drop, in my opinion, at least down to the primary bull market uptrend line. And if that goes, again, we'll talk about it if and when we get there. But you can see, wash, rinse, repeat stuff. These divergences, more often than not, play out, and they play out for tradable trend changes. Trend changes you can position for weeks to months, sometimes even years. All right, so that's kind of the bigger picture there. I already showed you the shorter term picture there, waiting for a break of the trend line. And as I told you, I'd give you an ETF here. Let's look at PKB. Now I marked this one up, but I want to say that of course there's another one out there, and I believe it has more liquidity, but I think PKB is plenty liquid. That's no, not XHB. My head's in the wrong place. XLB, the Spider Select Sector Materials ETF, similar. So you have a similar basket of stocks, similar trend lines here, similar technicals and everything else. I've had this because this is a sector in the S&P 500. I had a lot of lines and annotations here. It's not as clear, but it's telling me the same thing. It's telling me corrections coming pending a sell signal, and you can see the trend line the way I have it drawn there. You can also take one down to the lows here and do it like that as well if you want. In fact, that one's just cracked if you draw it that way. But let's just go back to PKB. I have it marked up a little more clear. And again, it's just helping paint the bigger picture, and you can see here the same thing. The divergences. Divergent high, 39% drop in the sector. Divergent low, 66% rally. There was a divergent high there at that time. 54% low drop, I'm sorry, and boom, the return rally took us right back to where we were when we started. So a couple things that stand out on this ETF. Number one, we're at resistance. We have a reaction high here back from early 2018 right there. Let's box that in. We have another reaction high there, really two in close proximity back in early 2020, and here we are once again at that level. So hard to argue that that's not a resistance level. That it is. Now whether it gets taken out and taken out by a large amount, only time will tell. Because of the posture right now, these divergences, overbought conditions, everything else, I would say that the odds favor any breakout being a marginal breakout followed by a failure. But the important thing is we have a nice clean trend line that's not too far below. So as always, you can take a shot here at resistance. That's always an objective level to exit along or to go short. Or I like to say, wait for a break of the trend line. And or means take a partial position here let's say a third, a half, and then you add to that position, bring it to a full position when you get the sell signal on the break of the trend line there. Minimum target, I'm looking for a drop of at least 10% in the sector. If I can grab and measure here, might have to go a little bit under there. Yeah, about 10% to that minimum target there, about 32.83, all the way down to about a 25% drop here at about the 27.75-ish level there. That's what, based on this pattern and everything else, and of course what's going on the weekly chart. That's where I think this one's headed. Weekly chart looks like this. You know, you had again an uptrend line here on PBK that was taken out, and again, this is where, you know, the Fed went nuclear and kind of you know, I think gave a temporary stay of execution to the great bull market this one's been in. But over time, the technicals will most likely play out. And again, it's you know, if you look at it, you can just say it's a bear market, and by all metrics, that was a bear market. But everything's in fast forward right now with the you know, excessive liquidity coming in. But it hasn't changed the, you know, longer term outlook there. You can see the divergences. Any new high or even equal high now, which we're pretty much at, is still a divergent high. And just setting the stage, it's much bigger than these divergences that happened in this bull market over the last decade or so here. Those led to pretty healthy corrections. And they were relatively small. This is a very big divergence. This is a kind that can give you a primary trend change ultimately. So that's why I'm doing the video. Now let's dive into the individual trade ideas. I'll go through there a little bit quicker. One thing that I like also is, you know, there are different sectors out there, different ETFs that track sectors that have a wide range of technicals. Biotechs are one example. You know, there's many different type of biotech companies, biotechs. Some are, you know, pure plays. Some are biotech / pharmaceutical hybrids, and some are working on, you know, there's all different types of drugs that they're working on. Some have, you know, solid drugs in their pipeline. Some have approved drugs. Some are little tiny biotechs with everything hinging on one drug in clinical trials. So effectively, then you have within the biotech sector a very wide, you know, array or diversity of bullish and bearish charts at any point in time. Whereas this sector, what I like about it is the charts are almost all in alignment as we go through the components. So let's dive in. Again, there's about, I don't know, maybe 40 in the sector. Let me pull that sector up again. That was IX 1020. I think there's about, no, actually a little bit more than that, but I'm going to go over only about the top 20 here. All right, in no particular order, just how I have them flagged in my watch list. This is MAS. MAS is Masco Corp. Nice clean uptrend line, very well defined, which to trigger an objective short entry. Again, can't say it enough. This is what I call a trade setup, not an actionable trade at this point in time. You know, the case was made that that the sector or that sector ETF is at resistance, but this stock is not. This stock is at an all-time high, so there's no resistance overhead. That's bullish for a stock when you're at an all-time high because everybody in the stock is profitable. Nobody's underwater like they are at a 52-week low or an all-time low. So you have a lot of you know, bullish. You know, and there's bullish momentum in the stock. There was a divergent low right there. However, the technical posture is very clear. It's had a nice run. The question is, it's not a question of will that bullish run end? It's when will it end? And that's what technical analysis is good for. You know, back here you look for, you know, divergent low was a catalyst for the rally. There was an uptrend line, a very well-defined uptrend line, and very clean negative divergence, just like there was clean negative divergence here, you can see, and positive divergence there. That's it. So wash, rinse, repeat. Go long after the divergent lows, look for buy signals, go short after the divergent highs. Down here, big drop there into the lows. And again, not only do you have nice clean and clear divergence, you have the PPO rolling over, confirming that divergence, recently making a bearish crossover. That's what I like to see as well. And now all we need is that breakdown right there. So I have price alerts set. I'd recommend do the same. And the way it works is the more of these stocks, I would suspect that on any given day or within a week or period of a few days, I have alerts set on maybe a dozen of these at least, if not more. I'll probably get those alerts going off like popcorn. When one breaks down, you'll probably get a few more that day, maybe that week. And if they don't, that's the other thing I wanted to say is that let's say that this is the one you like. I'm going to go through several, some look better than others. If this one were to break down and give you a sell signal, let's say tomorrow, but none of the others broke down, the sector itself hasn't broken down, they're still in an uptrend, well, chances are that's going to prove, if unless those other ones do end up breaking down shortly thereafter, that'll probably prove to be a whipsaw signal. So again, that's why I do this video. You could have stopped it at the part where I covered the ETF, say I don't want the individual stocks, but if you want to lessen the chance of getting caught in a whipsaw, of losing on a trade, if you're serious about this, you follow the whole sector, follow as many of these stocks, and it's not hard to replicate these trend lines. Use log scaling, and then most brokers, you just simply click and set a price alert, and boom, you have an alert. And when it breaks a trend line, you'll be notified. All right, so that's it. Since most of these charts are similar, I won't spend so much time on each one. I don't have each and every chart fully marked up, but for the most part, I have some targets, or at least initial targets. On Masco here, we're looking for about a 13% drop down to the 49.70-ish area. Now that would be from current levels. If it goes up higher and up here, and we get the sell signal 3 weeks or 3 months from now, well, that would still be a target. It would just be calling for an even larger drop. MLM. Martin Marietta Materials, just again clean looking charts. That's why I picked this sector to do this video on. You get these uptrend lines, you look for the divergent highs, wait for the sell signals, boom, you get a nice clean uptrend line. That was the big drop early 2020, and see, this was well before COVID. This one broke down in late December, early January, made a back test, a perfect back test following the divergent high, started to fall. By the time the market started to roll over, this one was already in free fall. This one was clearly on a sell signal, and here we are now. We have divergence. There's your divergence line, there's our uptrend line. There's nothing to say that this one can't carry higher. It's all going to depend on what the sector does. So if I don't follow up on these because we don't get any sell signals soon, maybe 2-3 months from now I'll do another update on this sector. Or if I start getting price alerts this week or next week, then I'll increase my analysis and maybe sharpen my pencil on some of these other ones and give you price targets. JHX, James Hardie Industry, I'm sure they make Hardie board. If you're a Home Depot buff like I am, that's used in construction outside houses, and maybe other products as well, I imagine. That's it. You see the divergences, divergent high, low, clean wedge there, clean sell signal, trend line break. This is almost an identical pattern right now, but bigger. I mean, this is what we had right here before this stock fell about 56%, over 56, and we have a very similar, nearly identical pattern, just even a larger wedge. So the potential, I'm showing you, initial or early pullback targets. I'm going to give you one more level on this one because it's looking pretty good. That's about 1987. We'll call that 1990, 1861, 1716. Should it break down, let's just say from where we're at today, if that target's hit, that's about a 23.5% drop. Trex, two nice trend lines to watch. This little one right here, it doesn't matter because they come in together. They're intersecting trend lines if this one were to break down soon. So I think I have, if I don't already, I'll set the alert on the second trend line. You got to be careful because there's a pretty decent support just below. So that's pretty much your all in or all clear level, about 31, 35 or so. When that goes, that should seal the deal for a breakdown and open the door to these targets down here, 1118, 50, 108.25, and then ultimately swing down to about 91.22, I think, based on where the charts are. Doesn't mean they can't do more than that. Just right now, with everything I'm looking at, that's what I'd be looking at for what I call a preferred swing target, longer term target. That's about a 37% drop from where we are if we get there. So plenty of meat on the bone on these guys. OC, Owens Corning, fiberglass, insulation, all that good stuff. And again, just the way these guys trade, it's just nice and clean to the technicals. You have these trend line breaks, boom, big bear market. I'm sure that one was well into the double digits. Very nice, well-defined downtrend line, clean divergent low. Actually, that line should be right there. There's your divergent low, positive divergence. You can see it down here on the RSI as well. And that was a catalyst for this bull market, or bull run right here, about 70%. And that ended with, same thing, negative divergence right there. And that was it. And here's a case, here's an example too. Sometimes stocks break the trend line, get a sell signal, never look back. Here's one that corrected in time for a little bit and moved sideways, making a little lower lows there, and finally gave up the ghost right here. And then the technicals played out. So there it is, a very similar pattern, nice steep rising wedge with a clean up trend line, negative divergence. Some of these charts I didn't finish marking up. In this one, I've had these lines on here on OC forever, so that's why they're not, I haven't even modified them. That's why there's no levels marked. But let me just, you can probably replicate this on your own, but that's about 59.75 or so right there. Certainly an early minimum target, and then down here, let's see, this one's all the way down to about 51 right there. So there's your potential swing targets, and a little stop along the way right here at about 56.15. Okay. SSD, Simpson Manufacturing Company, same thing. Wash, rinse, repeat. Look for the divergent highs, divergent lows, divergent high, correction, divergent low, bull market or bull run. Divergent high, trend line breaks, again, sell signals. You don't just short divergence, you don't short overbought, you don't buy oversold. You buy oversold with divergences, you buy oversold with a breakout, trend line break, or break above resistance. And here you short on the breakdown above the wedge. Boom. Here it is. There's your clean divergence right there building. It could continue to build, or maybe that's it. I wouldn't do the video if I didn't think these guys weren't ready to pop. I watch sectors for months, sometimes years. I wait for developments to build. I don't throw out everything I see all the time, or you guys would be inundated with charts and your head would be spinning. So I try to wait till something looks like it's ripe and ready to go, and then start highlighting it. And again, so that's it. We have setups here. Same story. They're all above trend. I don't think a single one of them's triggered a sell signal yet. But the thing about shorting stocks, unlike going long, rare exceptions, this was Fed-induced rally, stocks tend to fall much faster than they rise. So you got to be quicker on the trigger. There's huge profits to be made. You can make a lot more money shorting in the same amount of time in short order, because stocks do fall faster. You just have to be kind of quick on your entries, and very much so on the exits. You cannot stay too late to the party. Once a correction is over, then things tend to go the other way fast. WMS, not one of my favorites, but this one broke out. In fact, it's at an all-time high, and that's bullish. That's bullish as long as that lasts. However, normally when a stock breaks out, this was the breakout point here. There was our previous all-time high, and did it again around 50.50 was a level. Testing, boom, broke out recently, had a nice run. Normally a stock will come back, especially if that breakout occurs, as this one did, with overbought conditions and negative divergence. You can see the divergence down here. In fact, you can extend that divergence all the way from this point. And so it's my experience that much more often than not, that's not always, but well over 50% of the time, when you get a breakout like this, you're going to come in and at least back test that level, that breakout, even if this one's has a lot more upside to come. If it did that, you're talking a drop of about 14% or so. So well worth it for a quick trade. Get in, get out, get a quick 10, 14% cover. Or if the sector seems to be triggering some very solid sell signals, because again, I laid out the potential for much larger drop when we look at the weekly charts and things like that. Then maybe you ride out the the counter trend bumps, and you just set a stop and swing for the fences and try to hold out for a lot more. What would a lot more be on this one? I think easily down here. There's some pretty good support down around 24.12. I could easily see a move back down to that level. I'd have to study the chart a little further, but we'll just leave that line there for now. Next up, EXP, Eagle Materials, and I use this one kind of as an example here. There's a level right here at 95. Very good resistance. I see a lot of reactions on there, but the stock is well below that. It's kind of in no man's land. There's a little bit of resistance just shy of that, and I'm going to put that in there right now. I do see a level right here, some around there. And we're almost to that level, but the purple line would show you, an alternative scenario. Let's say this bullish trend has more traction, continues for a while, and we do rally up to the 95 level. Well, that's very good resistance right there. And if we do anytime soon, we're going to still have these divergences in place. They're not going to be burned through anytime soon. So that's one that I'll keep on my radar. However, we get the sell signal before then, we may not make it all the way up there. So that's what I'll be watching for. LPX, Louisiana Pacific, pretty good resistance right here. That's the story of this one. Overbought at resistance, negative divergence. I mean, a lot of check marks, everything but a sell signal. There was a reaction high, and we're talking about 32.20 or so. A breakout above that level, it proved to be a false breakout. That's a bear trap, bull trap, whipsaw signal, false breakout, whatever you want to call it. You had a little trend line here, it broke, and there was your sell signal. Two sell signals under the trend line, as well as back down below 32.20. I often say fewer things in trading and investing are more bearish than a failed breakout. So this was a failed breakout to new highs. Longs pile in, shorts get squeezed out, and then when the stock fails, that's usually when you get those big reversals right there. So let me give you a target here. I definitely see good support around this level right here, and a very likely target. I'll give you a little bit shallower target as well. Right about there, there's a gap, give or take. I'm going to make it a target zone since we have a reaction high, so the bottom and top of that gap. So there's your target levels, about 28.50 to 28. It's T1 zone, we'll call that target zone. It's pretty tight range, about 50 cents. And then down to about 26.37, and that would be, again, depends if and when we reverse. That'd be about maybe 12% to that first target and about 18% to that second target. And certainly the potential for more. We'll just have to see, how does this sector look at the time, of course. How does the stock market, the broad market look? What's the Fed doing? More so, what's the market doing? The Fed's going to do what they can do. They're already all in. They've completely pushed their hand all in, and there's no going back now. So let's just say, it's safe to expect that if and as the market, next correction, Fed's going to throw whatever bullets left they have. And we'll just see at some point it'll be like pushing on a string. Low rates, and you're not going to have any additional effect. I just want to point out there was a big, nice divergent high there as well. As I look at these charts, again, I didn't mark up every little feature on there, but a lot of these big moves are telegraphed in the technicals, and right now they're pretty clear to me. BLDR, Builders First, Source, not one of my favorites, but you can see big divergence building, and this one's probably going to come back, at least come back and test this trend line right here. That'd be a minimum target right there. And there's also a gap, some support there, and I'm just marking up targets, rough targets right now. IPB, Installed Building Products, nice clean similarity here. That's the thing about it. A lot of these stocks are set up in very, very similar technical posture. Steep uptrend lines, overbought conditions, negative divergences, just like we had the negative divergences here heading into that high wedge type pattern there. And you can see what happened. There was your sell signal. It wasn't random. It was a big red candle right through the support line, the uptrend line. Little kickback rally if you missed it. Hit these 200-day moving averages right here, the simple and the exponential, bounce off there. For a near back test, there was also some price resistance there, and I'm going to put a level right there on this one. I like this chart. Bare minimum target right there, 74.20, and that would be a drop of about 15%. Secondary target would be right about here, 63.72, give or take, and that would give you about a 28% drop. JELD, Jeldwen, Nice clean rising wedge, same story. The wedge pattern. It's like you had one right there. There was your breakdown. There was your drop. Bigger wedge, potentially bigger drop coming if and when that triggers. I don't have targets marked up, but say there's one down there about 1376. BECN, Beacon Roofing Supply, same thing, wedging up. Not all of these stocks are at all-time highs either. This one's been stair-stepping lower. It peaked back in early 2018, late 2017, and has been stair-stepping lower since. There was a divergent high there as well, telegraphing that. Kind of traded sideways all of 2019, broke down. We're back in that range. So this one's really trading at resistance, and what stands out are current divergences and the cleanup trend line like most of the other stocks. DOOR, Masonite Worldwide Holdings, nice cleanup trend line. Look at all these reactions here. Look at the divergence, beautiful divergence, just like you had the divergence right there. Here's your divergence lines down below, and same thing. It wasn't just random out of the blue. There was your sell signal, boom, kickback rally. Last chance to get out of your longs or get into a short before the bottom fell out of that one and ended there. Nice little divergence on the RSI at that low, like so many other stocks and sectors, and boom, there was a rally back up there. So another nice looking one with a lot of potential. BMCH, same thing, divergence, uptrend, a little different here. I'm going to give you another line right there. You had some resistance right here. Just recently broke out of. If it falls back below it, that's going to be a failed breakout. Minimum target would be back down to the downtrend line. Uptrend line, I'm sorry. ROCK, what a name for a stock. It makes me think of falling or dropping like a rock, because that's probably what this one will do. It'd be nice to have a name like Rise or Lift or Ascent or something like that. But well, rock is certainly not falling like a rock right now. In fact, it just broke out to new highs right there. That's a breakout to all-time highs. You can see the buyers piling in. Again, it did so with extreme overbought conditions. Stocks that break out to new highs while extremely overbought usually get checked, come back in at least for a back test of the breakout, and quite often you're going to come down a little below that. So I would favor this a move back down here to the 53.60-ish support right there. I think that's all too obvious a target, that gap right there. I think it is certainly a potential target. So no sell signals on this one. You got to be a little more careful. I don't have a clean uptrend line, at least we're not close to it. That'd be about 18% drop just to check the breakout point, the top of that gap from where we're at now. And a gap backfill, my preferred target's about a 23% drop. Again, there is an uptrend line, and that would also align with that pullback target you can see right there. So this is, again, depending on when it reversed, you just have to wait for a sell signal or wait for the other ones to break down. If you see the majority of the stocks I've just covered and or the ETF or the sector itself trigger sell signal, and this one hasn't done so yet, it will follow. Again, because of the tight correlation, birds of a feather, at least in this sector, they flock together. PATK, this one's stalling up here around its previous highs right there. You can see, back then, late 2017, 2018, tried to get up there again, failed, and it's back there. So this one's at long-term resistance. Clean negative divergence right there, just like the last time we had negative divergence on this daily chart. Our daily time frame was right there. So divergence, we had divergence here at the top of that head and shoulders pattern. There was your left shoulder head with a divergent high right there, your negative divergence. Right shoulder 1, right shoulder 2, neckline, boom, broke down. All right, next up would be, and that was a divergent high too. Again, I don't have each and every item on these charts marked up, but you can see just, the pattern that these guys go through, these divergent lows, divergent highs. PGT Innovations, probably the window company. PGT is a big window company, at least down here in Florida. I know that, with a lot of the hurricane windows that we have. All right, just throwing a line in there. Let's just focus on what to watch now. Nice clean little wedge like everything else. Steep uptrend line. clean negative divergences, overbought conditions, minimum target 1621, preferred swing target 1369 if hit, and it's at resistance now, so you can make a case if you want. It's a little aggressive, but step in here. About a 31% drop if we get there. If we continue to push higher, we'll see. As long as these divergences stay intact, I'll keep an eye on this one. FRTA, Forterra, same thing. Wedge pattern, almost identical to the last wedge, almost identical to the last trend line right there. Wash, rinse, repeat stuff. So this is what I'm looking for. Break of that, and last time we did this, I think at minimum we'll do bare minimum this 1075, most likely swing down to about 850 minimum. Well, not minimum, but let's just say my current preferred pullback target for a swing. USCR, US Concrete, this will be the last one. This one's a little smaller in market cap. All the other ones I covered were $1 billion and up. FRTA was just under that number. This one's smaller. It's only a $456 billion company. But we've traded this one in the past. It used to be a lot larger, so I figured I'd highlight it. And there it is. There's your negative divergence. Two trend lines, trend line 1, trend line 2, minimum target 2050, another potential target down at 1469, be about a 50% drop if we get there. To the minimum target, we're talking about a 29 or so percent drop. If it pushes higher, we'll keep an eye on it, and it has significant resistance up here starting to come in around 38.52. All right, let's wrap it up here. We'll keep an eye on it, and I should say I'll keep an eye on the sector and point out any significant developments that I see. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.